All right, fantastic, and we are live. Wow, there's a lot of going on. We finished February, and February was a losing month. Today, markets try to shake off the February slump, but not going too well right now because we have the tariff tensions, we have the trade war. However, there were news on the Bitcoin and cryptocurrency Skyfront front this weekend, and we'll talk about this. So there's a lot going on there. In addition, Tesla in the news, Nvidia dropping today, VIX fear index higher, and we have a lot going on this week, like jobs report, earnings. So as you can see, we have a lot to cover today. So with that said, let's get started, and welcome to Coffee with Markus and Mark. And today is Monday, March 3rd, and in this show we are going to talk to you about what's happening in the markets and how we are trading it. Why? That was a rocky start. Kind of like the markets starting into the week or the 1st of March.
Yeah, wrapping up the month of February, Marcus. So we're off to a new start, fresh start for a new month. But February was a tough one for the markets. The markets finished with losses. So the Dow and S&P were down 1%, more than 1%, and the Nasdaq saw its worst month since April of 2024.
Yeah, Nasdaq down 3.5%, and a lot of this coming from a few days of sliding because there's a lot of uncertainty right now in the markets.
Sure, I mean there really is, and even last week it was a down week, and then Friday we got a push higher, a little bit of buying, maybe a buy the dip going into the weekend, and so even the start today it seemed like it was positive and things were looking pretty good, but then we turned negative, and a lot of this has to do with the T word.
A little bit of an echo. It should be better now.
Oh,
Let's try this again because I
okay,
just heard
is that better now?
it should be better. Let's just make
Okay.
sure. Just waiting for confirmation.
I
Okay.
am speaking just to make sure that there is no echo now.
Yeah. I think we should be better. We'll just keep going. We'll be fine. Okay.
Sounds good.
Good. So, yeah, with that said, the word of the year so far seems to be, as you said, the T word, tariffs. What's going on with this? And I mean, this is where, it gets tricky. We have a new deadline this week. And this is where we heard from the White House that President Trump says the Mexico and Canada tariffs will start March 4th. That is tomorrow, plus an additional 10% on China.
Yeah, and it looks like uh, with those tariffs, I saw that Mexico has offered to match the U.S. tariffs on China too. So, this is just something that is, I mean, really everywhere.
Yeah.
To tariff or not to tariff? Is it happening? Is it happening in April? Is it happening in March? And that's the thing. The markets do not like uncertainty. And so with all of these changes and switching things up, it just creates this extra volatility, which is good for certain styles of trading, but a little chaotic for the markets.
Yeah. Because, I mean, let's see what's happening. On Friday, we also had the core PCE price index, the Fed's favorite inflation gauge, came in as expected. However, also showing that inflation currently is still running at 2.6%, and it has been there pretty stubbornly. Now, recently, we saw more and more indicators from the economy, like the consumer confidence, the new home sales, unemployment claims, durable goods orders, that the economy is slowing down. Now, this is exactly what the Fed wants by having interest rates high. However, it is a problem that right now inflation is not moving any lower. And the whole tariff situation will not make it much better. In fact, this weekend, a rare comment from Warren Buffett on Trump's tariffs here. I mean, Warren Buffett usually stays out of politics altogether, but he decided to comment on the tariffs, and they said, you know what, this will be a tax on goods. The tooth fairy doesn't pay them, in his words. I mean, this was historic quote. So what does it mean? It means that right now economy is softening, and this is what the Fed wants to see. However, they can't lower interest rates just yet because we also have the inflation, and inflation might actually kick up and move a little bit higher, Mark.
And that's a big factor for the markets, and whether or not those inflation concerns and higher prices can be offset by economic optimism with the administration.
Right. So looking at the Fed Watch tool here that we like to use, we see that right now, I mean, traders are not yet expecting that there's any cuts coming up here in a couple of weeks from now. Also, no cuts in May. If at all, it might be June. And this is where right now everything is still, yeah, happening. And there's a lot of data that can come in before June here in terms of unemployment, in terms of inflation, and also lots of economic data.
Exactly. So we have 3 months of data before June, March, April, May, going into June, maybe 4 months because of June's reports, and it's all going to come down to that data. I think that a cut in June right now seems unlikely, but everything can change once we get more CPI data, more core PCE data, jobs. So it's up in the air, really.
Speaking of jobs, I mean, this week on the economic front, I mean, huge week for jobs. On Friday, we have the monthly job report. So this will be for February coming out on Friday. Average hourly earnings expected to move lower. Non-farm employment change ticking slightly higher. Unemployment rate expected to be the same.
We shall see.
We shall see. In addition, we also still have some earnings rolling in this week. This week, usually towards the tail end of earnings, we have retailers reporting earnings. And this morning, no, tomorrow morning before the bell, we have AutoZone, Target, and Best Buy reporting earnings. Target might be a big one here, giving us more indications of what shoppers are doing right now. But it's not over. We also have Kroger and then also Costco. Costco, usually a big one because, I mean, honestly, with Target, Kroger, and Costco, that's almost like getting consumer confidence data.
True, true. So retail in the spotlight, but the biggest reporter, Broadcom, AVGO.
Broadcom AVGO on Thursday, and talking about Broadcom, I mean, this morning, semiconductors under pressure. Look at this. NVIDIA leading the markets lower here this morning. Broadcom also 3% lower. NVIDIA down 4.5%. I mean, this is a pretty good slide, what we are seeing here.
Yeah, we see that big fat red box and bright red. So a decent dip for Nvidia.
Yeah, for sure. I mean, kind of out of the blue, not really any news. Could be related, however, to the China tariffs that will go in effect, I believe, tomorrow, right? I mean, this is when the additional 10% are kicking in. So I don't know, might or might not be connected to this. Or maybe, I mean, NVIDIA right now that has been really flying high over the past few years. Look at this. I mean, maybe the growth in AI is slowing down.
Could be.
Could be. We shall see. All right. What else? Over the weekend, more news from President Trump. And this time, he talks about cryptocurrency. So he announces a strategic crypto reserve, including Bitcoin, Solana, XRP, Cardano's ADA, and also Ethereum.
Yeah, and Bitcoin was up 10% after hitting a 3 month low on Friday. So a nice little move with that news and getting crypto investors and traders a little bit excited. But today looks like uh, sell the news type situation. Bitcoin down almost 5%.
Yeah, I mean, it's surprising really that Bitcoin does not have a follow through because, as you said, pretty impressive move from the lows to the highs here. I mean, this total of 22% that Bitcoin was rallying since it hits the Friday, the 3 months low here. But yeah, today pulling back a little bit. And I mean, it's all back to the uncertainty in the market. Look at this. I'm bringing up the VIX here, the fear gauge. And I mean, this is where usually we have been in a range of anywhere between, I want to say, 14 and maybe 17, right? Recently, I mean, this is what when we look for most of the year, but recently it seems that we get a new range here between 18 and 22. And this is because of all the uncertainty. Yeah, with the economy slowing down, what will tariffs do to the economy? What will it do to inflation? So, definitely more fear in the markets.
Yes, and that helps for option selling if you're trading strategies where selling is something that you are doing, and it just means that there's greater uncertainty because traders believe that prices can fluctuate more than they have in the past. So that could be to the upside, it could be to the downside, but many times the VIX will spike because of a move lower, and that's what we're seeing this morning.
Yeah, anyhow, I mean, with everything that's going on, never a dull moment with tariffs, with the strategic cryptocurrency reserve, possibly, right? Then with everything that's going on with Doge, the Department of Government Efficiency, and Elon Musk, the layoffs there, how will it affect the job market? Will it already be reflected in Friday's job report? I don't think so, but overall, traders and investors are like, what's going on here? Let's see. With that said, shall we jump over to our positions?
Sure.
WTF, let's get started there. Our win the fear. This is what WTF stands for. I mean, this year it has been working out so far phenomenally. Knock on wood. And today we got a total of 5 exit signals, Mark.
Yeah, all close for a profit, I believe. So Bank of America was actually one that I traded. You passed on it, Marcus.
Yep.
I closed it at 46.21 after getting filled at 44.61. So almost a buck 50 there, buck 60.
Yeah. BKR, we both decided to take the BKR, Baker Hughes trade, and we see we entered at 43.74, exited this morning right around this price. I believe it was at 44.95. So another
Actually,
nice.
45.13 got a little better.
Oh, yeah, yeah, you're right. 45.13. So, I mean, this was a good one. GE, I mean, GE was just skyrocketing. Look at this. I mean, pulling a little bit back today, but we are already out of this one. This where we got in at 198.98. And what was our exit here this morning?
206.82.
206.82. I mean, so this is a nice what $8 gain on this stock. So this worked out really well. MS, that is the stock, a trade that I took. You did not take it. And also here, this worked out just great. The entry price at around 131.03. And then the exit price was at 133.11, kind of where we are trading right now. So another nice $2 gain here. And WFC, Wells Fargo, this is a trade that you decided to take. I decided to skip this one. And this also worked out really great for you.
Yeah, 78.65 and exit in a couple of days there. 220-ish profit. I'll take it.
For sure, for sure. Now, we also have quite a few open positions here. And the open positions right now, with the tech sector today showing some weakness, are a little bit underwater here. So, Amazon, we entered at 217, right now trading at 209. AVGO, this is where we need to pay attention to this. Coming close to our stop loss. And that's the beautiful thing about the WTF strategy. We do have a stop loss in place. So, if needed, we will take the loss. We entered at 218.60. Right now trading at 140, 194.73. Our stop loss is at 189.76. Right now, still alive and kicking, but making sure that
Yeah.
we have the stop loss in the market.
And that's part of the strategy. We have two exits, a technical exit and also a stop loss to minimize risk and be able to move on to other opportunities.
Yeah. CPRT, Copart. I mean, this is where also we entered at 55.45 right now, slightly down at 55.10, so down 35 cents here. Nothing for us to do. Google also taking a little bit of heat today, and right now trading at 172, down just about flat for the day. We entered at 176.95, right now trading at 172. And then Marvel, this actually, it was a pretty good one because we entered this as an OBE, open below the entry.
Yeah, I got filled at 87.70. So I picked this up at 87.70 and as an OBE, it's up $2 right now and we'll look for an exit.
Yeah. This is looking good. We also had one new trade today, and the new trade that we had was GEHC. However, if we look at the chart here, we see that we don't have much data. GEHC, GE Healthcare Technologies, was a spin off from GE and has only been trading for the last 2 years. And this is where we issue a warning where we say it has been trading for less than 5 years. So we don't have enough data yet that helps us make informed and confident trading decisions. And therefore, we recommend not to trade it. And therefore, we skip this one.
According to plan.
According to plan, ATP. All right, hopping over to the wheel positions, and we are having lots of fun here with our wheel positions. So first up, CSIQ and CSIQ. I mean, last week on Friday slid down below 11 again, and this is where we have been talking about it right now. Want to see where can we establish support? Is it at 11? Is it more towards the 10 level here? Right now, slightly up for the day against the overall market. So we will see if we can push back above 11. Right now, nothing for us to do right here.
Waiting on this one.
HAL, super interesting. We are assigned at 34.50. My break even here at 31.61. Considering flying a rescue mission here at around 25 to bring down the cost basis and the break even. However, right now I'm holding off because we also have an ex-dividend date coming up this week, and it is in Wednesday on March 5th.
Yeah, so 17-cent dividend, and shareholders on record at the open are entitled to it. In theory, the stock will drop by that amount, be discounted by 17 cents at the open on the X date, and we'll see where we're trading. But I agree. This is one I'm considering adding to bring down my cost basis. But we'll see if we could. I mean, there's some decent support at 26, Marcus, but that
Yeah.
lower range that we had in February around 25. Wonder if we could get a little bit lower.
Yeah. We'll see. Okay, IWM, that is a trade that we took last week, and this is working out just beautifully. I mean, last week we sold the 217 put, and we did get assigned on Friday. And this morning, we were able to sell calls against our existing position at 217. So this morning, we got $2.40. So this is a lot of premium that we had this morning. Now, IWM right now pulling back a little bit. And Mark, I'm okay with this because it might actually help us to double dip.
Oh yeah, and I mean this is where at the open there was a nice little push higher. There was some great premium at the 217, so you got 240, I got 242, and this
I
is
had to
just on
rub it
top.
in. I had to rub it in. I was waiting for it. I really was waiting
This
for
is
it.
This is on top of the 202 that at least I got for the 217 put. So that's, $4.44 in premium collected on this position. And if it pulls back a little bit more and exit at 90%, or even if there's a bigger pullback today or tomorrow, I'd get out at 80% max profit. but nice to work that break even lower, and we'll see where this ends up on Friday.
Yeah, so that's definitely a trade that we are having fun with. Coles, also at Coles right now, I decided last week to start flying a rescue mission right here at 11:50. So I sold the 11:50 puts that are expiring on Friday. So we'll see what happens there. Right now, trading slightly above there, but it doesn't matter where it is today, tomorrow, Wednesday, or Thursday. All it matters, where will it be Friday after the close? Right now, my cost basis at 1880, my break even at 1708, and I'm trying to bring both the cost basis and break even lower. Hopefully, somewhere towards around this 15 level here, so that with the bounce back, I can get out of this position here. So that's what I'm looking for. That is my plan.
Yeah, looks good.
All right. And then Merck, a position that I'm in, you're not in. And I mean, Merck has just been great. I mean, Merck has been on a tear over the past few weeks. I mean, moving higher almost 15%. Now I've been able to collect some premium on the way up here, even though I got assigned at 120. My cost break even right now at 113.36. And here also, I was very interested in flying a rescue mission right at around 85 to lower it. And you see this is where I sold some puts, collected more premium, bring down my cost basis even some more. And well, right now, still waiting for retracement, interested of maybe around the 85, 86 level, flying a rescue mission. But right now, trading nicely at $92, loving this. And as you can see, also soon coming up in a couple of weeks from now, another ex dividend. So a dividend stocks, this is why we like trading those. So another 81 cents per share traded, which will lower my break even by another 81 cents. Loving this.
Not too bad.
Gosh, and UPS, what can we say? UPS, I mean, this is just working out perfectly. I mean, with UPS, you flew a rescue mission, bringing down your cost basis to what, around 140, right? Somewhere
Yeah,
around
my
there.
numbers were. I mentioned it last week. My numbers were a little bit off on the cost basis, but I think almost in line with the break even. And just to clarify, with what I did, it brought down my cost basis to 140.67, and my break even's now 127.80.
All right. Well, my cost basis is at 144. My break even at 121.55. Where's your break even?
127.80.
127.80. So somewhere around here. So this is looking good because UPS also just had a great move over the past couple of weeks. I mean, moving up here almost 11% for UPS. That is a massive move. And I mean, we kind of know the pattern. I mean, we have seen it before, right? I mean, UPS seems to like the idea of, okay, let's gap down and then crawl our way back up. Let's get back gap down, crawl our way back up. I mean, this is a very typical pattern. I think we will both be in a fantastic position here with our break even towards the lower end of the range and our cost basis towards the upper end. So we might be able to sell calls here as soon as next week. So this is working out just beautifully.
Yeah, love this move, and it looks like there's pressure to fill that gap, which is what we wanted.
Exactly. All right. So this is what's going on. And also right now in the markets, we do see some movement right now. Really interesting what's happening. And before we go back to the indices and see what's happening here right now, it is the time in the show for our dad jokes. So, Mark, what do you got for us this morning?
Well, Marcus, this is as dad jokey as it gets.
All right.
How many tickles does it take to make an octopus laugh? 10 tickles.
Okay. All right. Okay. Well, I have an easy one for you. What does the horny frog say?
I don't know,
Rabbit,
Marcus.
rabbit. I was betting on your reaction. I already knew the reaction is like, that's so disappointing. I thought, is this borderline? Can I tell this? And I think I can. I mean, you guys let us know in the comments. And I knew that it would get a head shake from you. I knew
Yeah,
it would get a head
head
shake.
shake worthy for sure.
All right, let's go back to the markets and see what's happening here. So we see the S&P 500. This is where we started this morning. So this morning at first, a rebound attempt. We opened higher, quickly pulled back. Right now, look at this. I mean, just a minute ago, we were positive for the day. Same in the Dow. Right now, markets are still trying to figure out what is happening tomorrow with the tariffs. Where is the news from the White House right now? Where is the reaction from Mexico? Where's the reaction from Canada? And that's what the markets are waiting for. Well, we already heard the reaction from Mexico, said, well, you know what? How about we also impose some tariffs on China? Can we get out of the tariffs road to the US if we do that? And we haven't heard a reaction from the White House just yet. So this is where right now traders are in a wait and see mode. And this is what we also see. I mean, this year it has been, well, pretty much since December, a pretty rocky market that we see here, trading in a range between 5,800 and 6,100.
Yeah, I mean, some uncertainty, volatility creeping up, and I think it's going to be like this for a couple of weeks at least.
Oh, yeah. I mean, it will be a couple of weeks. I believe that we will see a market like this for at least another 4 to 6 weeks. I think it will be until mid-April when we have more numbers and know how the tariffs are impacting the economy, see what inflation is doing. So I believe until then, traders will be on the edge. We will see VIX levels probably around the 20 level, going up to 22 to 24, and just more uncertainty until we know what's happening here.
It's going to be a fun one.
All right. Well, we hope that you enjoyed today's show. And if you did, give us a like. We really appreciate it. If you find this helpful, just forward it to others. There's a share button somewhere here, and leave a comment. Let us know what you enjoy about it, and let us know what you think about our dad jokes. Who was the winner today? Anyhow, with that said, have a great rest of the day and the rest of your week. And we'll see you again next Monday.
Happy trading, everybody.